According to the latest data published by Forbes, there are just over 2,800 billionaires worldwide. At first glance, that number feels impossibly small compared to the global population. But here's the detail most people overlook. The majority of those billionaires did not inherit their wealth. They didn't come from ultra-rich families, didn't receive massive trust funds, and didn't start life with everything figured out. They built their fortunes over time through decisions, risk, and long-term strategy. This fact alone should challenge the way most people think about wealth, because it proves that being born rich is not the only path to becoming rich, even extremely rich. In this video, we're breaking down 6 of the most common paths people have taken to become self-made billionaires. Some of these paths require taking massive risks. Others demand patience measured in decades. None of them are easy. But together, they reveal something important. Wealth at the highest level is usually created, not won, not gifted, and not accidental. Inheritance versus self-made wealth. Before we dive into those 6 paths, it's important to clear up a common misconception. Not every billionaire started from absolute zero. Some inherited money, companies, or valuable assets. But inheritance is rarely as simple as people imagine. There are families where billions are passed down almost intact across generations. In those cases, the heirs don't need to build, they only need to preserve. Then there are people who inherit a significant amount, maybe a few $1,000,000, which gives them a huge advantage, but still no guarantee. Turning $5 million into $1 billion requires multiplying wealth 200 times. That still demands skill, timing, and discipline. And finally, there are those who receive some early support but must still scale aggressively to reach billionaire status. Even when someone starts with capital, the challenge of compounding it into billions remains enormous. No matter the starting point, becoming a billionaire is always an extraordinary achievement. It's also worth remembering this. Inherited wealth doesn't appear out of nowhere. At some point, someone had to create it, usually by following one of the paths we're about to explore. Path 1. Building a high-growth business. The first and most common path to becoming a self-made billionaire is building a company that scales massively. This is the founder's path. Most global giants didn't start as massive corporations. They began as small operations, often serving a niche market, with limited resources and uncertain futures. What set their founders apart was not certainty, but vision, the ability to see what something could become long before it actually did. Building a high-growth company takes time, often decades. It means raising capital, expanding into new markets, reinvesting profits instead of spending them, and surviving long periods where success is anything but guaranteed. When a company eventually goes public or reaches global scale, the founder's equity, their ownership stake, can grow from being worth thousands of dollars to millions and eventually billions. This path doesn't offer fast rewards, but it offers the largest upside. And that's why founders dominate billionaire rankings worldwide. They invest years of effort before the payoff arrives, and when it does, it compounds dramatically. Path 2. Ownership over operations. The second path is closely related but slightly different, owning businesses rather than running every detail yourself. You don't always need to be the person designing products, writing code, or managing daily operations. In many cases, the real leverage comes from ownership, holding a significant stake in a business that grows rapidly. Ownership creates asymmetry. If the company succeeds, owners benefit disproportionately from the value created by the entire organization. But this path also carries risk. Owning a poorly managed or badly timed business can lead to major losses. Still, for those with the ability to spot strong opportunities, assemble talented teams, and think long-term, ownership can be one of the most powerful wealth-building tools available. Path 3. Riding the wave of new technology. The third path has historically produced the largest fortunes ever recorded, being early in transformative technology. Every major economic era has been defined by a dominant innovation. During the Industrial Revolution, it was steel, oil, and railroads. In the digital age, it was software, computers, and the internet. Today, the pattern continues. Artificial intelligence, renewable energy, biotechnology, autonomous systems, and space technology are reshaping industries at a global scale. The people who build and own companies at the frontier of these changes tend to capture extraordinary value, often because they create solutions most people don't yet understand. This path is the hardest because it requires operating in uncertainty, but it's also the most rewarding. Those who succeed don't just accumulate wealth, they redefine the future. For example, a long-term investment of $1,000 into a high-performing company decades ago could grow into tens of millions of dollars today through compounding alone. Very few people reach billionaire status solely through investing from the beginning. However, almost every billionaire relies on investing to preserve and expand wealth once it's built. Path 6. Extreme diversification. The final path is strategic diversification. Instead of concentrating wealth in one business or industry, capital is spread across multiple asset classes. This can include real estate, private companies, public equities, debt instruments, venture investments, and experimental projects. The advantage is resilience. A downturn in one sector doesn't destroy the entire fortune, while successes in others fuel continued growth. Over time, diversification becomes both a safety net and a growth engine. At the surface, every billionaire's story looks different, but underneath, the same themes appear again and again: long-term thinking, calculated risk, persistence, and strategy. You don't need to follow all 6 paths, but understanding them helps you make smarter decisions about your career, your investments, and the way you think about money. Wealth at this level isn't about luck, it's about positioning yourself where opportunity, time, and leverage intersect.